Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So, let's get into today's episode. Hello everyone and welcome to Crypto for Advisors podcast. I'm excited about today's episode with Jason Titman, the CEO and Executive Chair of leading Australian crypto exchange Swyftx. Jason is one of Australia's highest profile crypto voices, shaping the future of the digital asset industry with a clear vision to empower individuals around the world through financial freedom. With more than 25 years of experience spanning traditional finance, e-commerce, and technology, Jason has led both startups and global enterprises. His career has blended entrepreneurial ventures with strategic partnerships, go-to-market execution, and investments across the US, Asia, Europe, Africa, and India. Jason's core expertise includes technology-led growth, mergers and acquisitions, and corporate governance. I followed Jason's commentary and I realized very quickly that we share a common aspiration to bridge the crypto service gap for Australian advisors. Jason brings a uniquely qualified perspective on this as he started his career as a chartered accountant. He understands how the advice industry needs to operate and the important role it plays for Australian investors. Jason, welcome to the podcast. I hope that you managed to find some downtime over Easter to enjoy with your loved ones.
Thanks, Andrew. Yeah, I did actually. It's very rare for me, particularly with all of the fact that I'm traveling almost every week and the fact that crypto markets are 24/7. But I did. Easter was very good weather and 4 days of certainly slowing down to my normal pace. So thanks for the invitation and definitely looking forward to the opportunity to impart some of my views, thoughts and experience to your listeners.
Fantastic. Well, I think we're lucky that the markets seemed to slow down a bit over Easter as well. Trump didn't send out any 3 a.m. tweets or sent anything skyrocketing apart from the Jerome Powell, incidents. But so you probably managed to get a bit of downtime and turn off the computer, which would be a nice change.
I did, and I think there's been so much narrative about Trump. I mean, what I will say for the crypto markets is that when he came to power in November and we were seeing that sea of red, the markets spiked and they continued to. Look, I think there's no doubt that he's a crypto-friendly president, but certainly lots of his other policies, particularly around tariffs and that, are getting all markets a bit jittery at the moment. But I think if we look at it, that's relative short-termism in terms of the long future and where we are at. But you're right, it was relatively subdued over the weekend. So let's see what this week brings and into the coming weeks.
Great. Look, we definitely avoid political sort of commentary here, and I'm not making any comments around what I think of Trump personally, but I think you're right in that, he is the biggest influence on crypto markets and global equities at the moment and has been dominating that for some time. So it really does, need to be understood. And I agree. I think that he's absolutely positive for the crypto market. I'm really looking forward to when his working group come out in August with their new legislation framework in the US. But I think that the way he goes about it obviously causes a lot of disruption, and that is uncertainty, and the markets react to uncertainty in an unfavourable way for assets that are seen as risky. So I think that a lot of investors still see Bitcoin as risky. It's interesting to see how that's holding up against equities.
Look, they do, but statistics are something that I think you can over-index on, but I like looking at them. And over the life of 15 years of Bitcoin, over the worst 4-year period, it still had a 23% increase. And over the last 5 years, it's had somewhere up to 1,200% increase. So it is still the highest, performing of assets. So it is exciting. I think the alpha that can add to a portfolio is interesting. But it certainly does depend on where your risk tolerance is at in terms of how much one might want to have in their portfolio. But it's definitely an interesting asset to be considered as part of one's portfolio.
It sure is, and that's getting us into the first topic. So let's introduce the 3 topics that we're going to go through today, Jason. The first is why advisors need to adapt to crypto. The second is let's explore some trends that you're seeing on your platform on Swyftx, one of the leading platforms in Australia. You get a lot of data from there. And the third third is then exploring what are some of the options that advisors have if they do want to embrace crypto or at least learn more about it. We can finish on that perhaps. Let's talk about the advice industry. You come from that traditionally, and it's got a tricky relationship with crypto. Do you think that crypto is an asset class that they will end up embracing?
Absolutely, but I think there's a few reasons why they're not. YouGov survey that we conducted quite recently showed that there's up to 20% of Australians currently invested in crypto, and there's another 15 to 20% that are going to invest in the next 18 months to 24 months. So that's 40% of Australians that are going to be invested in crypto. They want it. So that's what I would say. Advisors need to be aware of. I think they also need to be aware of, and they should be, that over the last 40 years, we have embraced the financial planning industry in this country. Okay, they've had some ups and downs in terms of legislation, but we've told every Australian you should speak with a licensed financial planner. At the moment, somewhere around 90% of Australians are not talking, or advisors are not talking with their clients around crypto. I think that's a big issue, and there's a big gap. The reality of it, if you've got up to 40% of Australians wanting to invest in it or already investing in it, they're getting information from somewhere. That means that they're not getting that investment advice from their licensed financial planner. So you're missing out on that. They're potentially investing outside of what they're doing with you. And I think from a fiduciary duties perspective as a financial planner, that opens up some interesting questions, but it also opens up that if you're planning on having your financial planning business in the next 5 years and you are not educating yourself about it and talking to your clients about it, they're getting that advice elsewhere and potentially you're losing them as clients. So I think it's multifaceted, but there's some of the statistics that I would say. I think we touched on earlier in terms of Bitcoin. The reality is it has outperformed all other asset classes 9 out of the last 12 years. That's a big asset class not to be talking to them about. The total crypto industry globally now is between $3 and $4 trillion. Bitcoin's been around for 15 years, and nearly 50% of hedge funds actually that have been focused on traditional asset classes now have some kind of exposure to digital assets. So with all of that information out there and facts, I'd be saying to financial planners, you're doing a disservice to your business, and more importantly, a disservice to your clients if you can't have some kind of conversation about it. That's not telling them to recommend it. That's telling them to have some kind of conversation about it.
And in your conversations with the industry, do you think that financial advisors and accountants actually see that and that they want to have conversations, or do you think that it's polarized? Some do, some don't. What's your experience in that?
That's an interesting observation, Andrew, because I think there's a little bit of both. There are definitely financial planners and accountants out there who want to. Without clear regulation and without the Financial Planning Association and the insurers clearly supporting it so that it can be on their API, it does make it challenging. So there are hurdles around it for financial planners. Having said that, I think there is another group of financial planners that are putting their head in the sand and still hanging on to it. Oh, it's too hard to learn this new asset class. Coming from traditional business and traditional finance, as I mentioned, or you mentioned that I have, absolutely, you have to lean into this. But if you don't understand the language, you can't have the conversation. So I would be saying that if you are a financial planner, and most of them would have known over their years, there's new products that have come to market, you've got to get yourself up to speed. So I would definitely say there are a lot that would like to, but they're hesitant for those reasons. There are also others who are putting their head in the sand. But the reality of it is this industry has proved now it's not going anywhere. In fact, in 2024, the total global volume of stablecoin transactions, which is a form of cryptocurrency, digital currency, was greater than Visa and MasterCard combined. So if that's not telling people that this is here to stay and it's really on the march, then I'm not sure what is.
If you look at market capitalization of Bitcoin, compare it to the biggest equity that we have on the ASX, Commonwealth Bank, it's about 7 times larger in market capitalization. In fact, Bitcoin market capitalization is greater than the combined market capitalization of all equities on the ASX.
You're right. I would ask the question of your listeners, how many of them knew those statistics before listening to this podcast? So I think, what you're bringing to the market is some really important conversations for financial planners. That's the sort of information that many of their clients are in possession of, though. And that's the sort of information that they want to be able to have that conversation with their financial planners and understand why. I mean, you can imagine the alpha lift that you can get in your portfolio, even with just a 5% of your portfolio being dedicated to crypto or Bitcoin itself as one of many. We're also seeing a lot of SMSFs are really wanting to start to have that conversation. And they're coming to us trying to find out financial planners and accountants that are prepared to have the conversation with them. So the demand is clearly there. And, back to your first question, why for financial planners should they be interested in it? I would think client demand, responsibility to your clients, and the absolute size of this asset class, and it's just continuing to grow.
A reflection that I've had recently about this is that it is a service industry. The advice industry are driven by their customer needs, and not all customers are the same. So if we look at the crypto acceptance or adoption for younger cohorts, it's nearly 50% in the younger cohorts, like in the 20s. But the older cohorts, it's 10% or even less than 20%, 10%, sorry, over 50s. And so if you are a financial advisor and your customer base is older, then perhaps the services that you're offering them also reflects the risk appetite and investment attitude or philosophy of those customers. So not all customers are going to be comfortable investing in cryptocurrency, and that's perfectly fine. But it does open up some pretty interesting dynamics when you think those customers starting to look at intergenerational wealth transfer. When these customers who are a bit more traditional in their views do start to transfer that wealth to the next generations, the likelihood is that those new customers, hopefully that stay with the advice practice, they are going to want to be having a conversation about cryptocurrency as part of a balanced, diversified portfolio. So I think that even if you are of that cohort where you may not be wanting to embrace it and you're not seeing demand from your customers today, then it's highly likely that your practice will be faced with that challenge tomorrow.
Really interesting observations there, Andrew. And what we're seeing with Swyftx, and bear in mind now we've got over 1.1 million Australian customers on our platform, so we have a reasonable perspective on things, is that the largest number by cohort are still the millennials. But the largest dollar value of crypto investments on our platform is the 45 plus individuals, investors. They are people that have traditionally been very successful in their executive careers. They've run successful manufacturing businesses, trade businesses, transport businesses, property development, etc. And they are putting an increasing portion of their wealth in there. So I will say that I'm seeing and we're seeing that there's a lot of direct investment from the 45-year-old plus. But that intergenerational transfer is really, really interesting. And I can share with you a couple of stories. 6 months or so ago, I was speaking with somebody who had no idea with crypto. He was at a dinner with me and realised I was the CEO and about the same age. So he said, hey, maybe I'll trust you to at least tell me a bit about it. Post that conversation, he had a first granddaughter and he wanted to start building. He'd been investing in gold all of his life. He said, I'm not sure I'm going to change investing to crypto myself, but I'm going to come to your platform and I'm going to set up a $10,000 BTC. I'll buy $10,000 and each birthday I'm going to put more in. Because he said, I think he described Bitcoin as the digital gold. He said, I don't know a lot about it. Been lots of conversations about it. My daughter is just starting off and I want her to be in understanding investments. And he said, I think gold's a bit old school. He said, let me buy Bitcoin. So that's an example there. There are several other people, and I'm talking people in their 70s that have been in my network that I've spoken to. They've sold multi-million-dollar businesses. They're starting to sell some properties to simplify things for their family. And their grandkids are saying, hey, as part of the family office planning or the family estate planning, when you sell these properties and these businesses to simplify things for us, can you put some of it into crypto? So these are grandparents that are saying our grandchildren are challenging us and saying, hey, it's nice that you're simplifying, the wealth as you look to transfer it, but we think you should be putting it in. And I'm seeing stories of, millions of dollars flowing in on that as well. So crypto has moved from this young crypto bro of people getting in and just trading meme coins and altcoins to generally looking at really serious investment, particularly the top 10 currencies. So that's what we're seeing. At the moment, there's between 6 and 10% of the 50 plus own crypto. So it's an increasing number. And there's about 12% of over 50s already have crypto in their SMSFs. So those numbers are growing. That is definitely a growing customer cohort. And once again, I think for financial planners, I mean, if you're going to sell your financial planning business in the next 1 to 2 years, then why bother? But if you genuinely want the value of your financial planning business to grow, and if you want to continue, obviously, as part of that, growing your customer base and retaining your customer base over 3 to 5 years and beyond, I think now's the time. You've got to start educating yourself and starting to have the conversations about this asset class is what I implore people to do.
And so thinking about that, how would you go about if you're a financial advisor and you wanted to learn a bit more, you wanted to be able to actually support your clients? A lot of them will be having conversations, tax planning conversations around this time of the year. And inevitably 40%, give or take, of them are going to say, hey, what about crypto? What can they say to them at the moment? What are their options for either building up their own understanding, participating in it themselves, and also directing their clients to solutions that is within their risk appetite as a practice without jeopardizing their compliance?
I guess the message that I would leave is that I think digital assets, and we've talked a lot in this conversation around crypto, bear in mind there's 30,000 plus crypto tokens out there. So that is a little bit mind blowing, even for the likes of myself. To put it in perspective, Swyftx only lists 440 of those. So let's put that into perspective. So I would say it can be a little bit overwhelming. I'd be trying to kind of break things down. So that would be number one. Number two, the industry uses a lot of different terminologies. So I'd be trying to come up to speed with those terminologies and understanding that this is a new asset class. It does offer a lot of opportunity, but it still should be, in my opinion, acknowledging obviously this is not financial advice, but it should only be part of a balanced portfolio. Financial planners have that obligation to understand the risk profile of their customers, so that's important. But as part of discussing where their clients can invest their money, I think it's a growing asset class that is being talked about not only in the bowels of parliaments around the world, not only in the bowels of reserve banks and central banks around the world, but it's at barbecues, it's Uber drivers, it's taxi drivers, it's everything in between. So I think I'll come back to it. Financial planners need to educate themselves about it. They need to get into this space. At the moment, over 60% of people are getting their education from YouTube on crypto. There's about another 15 to 20% getting it from TikTok. That leaves a much smaller portion of people getting it from traditional markets. So I think the industry bodies, the Financial Planning Association, CPA, Chartered Accountants Australia, New Zealand, etc., I think they should be pushing their industry associations or professional bodies to be offering a few more courses on it. I think they have to take a little bit of their self-initiative. For me, and this has been since in my late teens, if I want to understand a particular asset class, I actually invest in it. And that's stood me well. It doesn't mean that I've continued to over-index on those particular asset classes, but if I want to understand it, I invest in it. So I would be encouraging them to actually do some direct investment in crypto, understand what it's like, how easy it is to sign up versus traditional finance. Understand the way in which the data is shown. I mean, you are getting crypto balances updated, certainly on the Swyftx platform, every 3 seconds. You've got to be a little bit careful that that kind of overstimulate your mind with things, but that's the reality of it. So it is a very different way in which this asset class is happening. I think also I'd be trying to reach out to find other financial planners in your network that are comfortable speaking about it. The crypto and blockchain industry also does a very good job. Here in Australia, it's called ADICA, the Digital Economy of Australia. It's the primary industry body. So there is also FinTech Australia and also the Tech Council of Australia. So there's some big industry bodies which are talking about the industry. And there's a number of conferences out there. So it's quite easy for you to find conferences, up groups, looking at YouTube, such as you're doing. I think the valuable thing, Andrew, of what you do with your podcast is you are a credible person speaking in this space. One thing I would say to be careful about, and it's something, as an emerging industry and even traditional industry, we've got to be careful. There are a lot of people spruiking particular cryptos and crypto projects, but they're getting paid very big money to endorse particular ones from behind the scenes. So I think, sometimes they've got to be a little bit careful. So I think, finding credible presenters such as yourself, and that's why I agreed to come on this podcast, is that you want them to have a trusted source of finding the information. So I'd be certainly following some of those practical solutions or suggestions.
A lot of fantastic insights there, and appreciate the vote of confidence, Jason. It is one of the reasons. It is the main reason I started this podcast. Is I felt that when you Google investing in crypto or jump onto YouTube and start looking, it is generally people spruiking products or services or that crypto bro kind of culture, which is great. There's a real energy for that, and the younger demographics really embrace that, and it's the way that they like to live, and it's a lifestyle thing, and so that's fantastic for them. But it has the opposite effect on the more mature market, the more traditional investors who basically see that and go, I can't take that seriously. So that is absolutely the focus of what I'm trying to do, is say, well, look, let's be balanced about this. Let's take a professional, pragmatic, and independent view of crypto, so that Synergist doesn't sell its own products and services. It's there to help people decide whether this is the right asset class for them to invest in and the best way to do it. So hopefully this does make a bit of a difference to advisors and their clients. I certainly hope so.
Look, absolutely. I mean, what I would also say, and I'm sure most advisors have learned this from when they first started to get into the industry, if it sounds too good to be true, it possibly is too good to be true. Having said that, I've never seen an industry where asset classes go up as much as they do go up. Certainly they go down as well, but, do get used to some fairly big returns and some fairly big volatility. But those top selling cryptos, or the top ones by market capitalization or value, the volatility as they're starting to mature is definitely coming down. One of the other things, we certainly acknowledge that it's the 40 plus probably, which a lot of the financial planners have. But I'm also seeing a lot of the younger generation have been struggling to feel that they can get into the property market. And one of the other areas we're seeing is that because of the fractionalized ability to buy a fraction of cryptos, you can get in and start trading with $20, $50, and there's not these minimum amounts that a lot of traditional finance products have. A lot of the younger ones are getting in, doing their research, building up, and then selling out of some of the higher volatility cryptos into the more traditional cryptos. But we are seeing stories all the time of people pulling off 200, 500 and much more and buying their first homes with it. So it's interesting, the use cases that people are. I think people originally in the media would have you view there's just all these young people getting in and trading and loading up on leverage and debt. Some are, some aren't. Some of them are very sophisticated. They're applying strategies to crypto that have been applied in the equities markets, futures markets, derivatives markets for a long time. So some of the younger people really are starting to understand themselves. And I'm seeing a new cohort of, I'll be careful saying they're financial planners because they're not regulated, and that's something that ASIC is looking into. But there's a new cohort coming on that are starting to attract the younger millennials. So I think it's a huge opportunity for financial planners. I understand it's daunting. Possibly if I was a financial planner with 20 or 30 years of experience, one other thing that I'd be suggesting is potentially getting a younger financial planner to join your group, and their project is to be tasked with heading up, attracting more clients around crypto and understanding it, and using that person who is a trusted person within your team to start educating the rest of your team. So I think as a more senior, experienced financial planner, maybe, it's not the area you want to spend your time directly getting involved, but I'd be looking at employing one or two other junior ones that are coming through that help bring that knowledge on and start modernising that aspect of your customer base and your financial planning practice.
Yeah, a common conversation that I have both with financial advisors and investors, retail investors, when I start talking about crypto, probably 80% of them have the same reaction. And they say, I'm really interested in it, but I don't know anything about it. And so therefore I stay out of it, which is a good thing to do. If you don't understand something, don't invest in it. And I don't have the time to actually educate myself and learn. And so sitting on the sidelines and it just being passive, but there's a tension that is building up. And I suppose most people would call that FOMO, but it's more than that. I think it's about, it goes back to what you said earlier around, you know, this is just another investment class and you should approach it with the same tried and proven principles of investing as you do any other class. You need to educate yourself about it. You need to understand what role it can play as part of a balanced portfolio. You need to have a plan, a strategy for what you're trying to get exposure to and how. But that does take a lot of time for people. So, finding somebody who can actually talk them through that, explain the different value narratives, say this is like in equities, you might have mining stocks and financial services and commodities. In crypto, you've got real world assets, you've got decentralized finance, you've got meme coins even. They all play a role, they all act differently. Bitcoin is a unique class, but then anything below that, there's a level of education that people probably need to get before they can actually really make an informed decision about which tokens to buy. And so I think that advisors, if they can't have that conversation, at least point them to the right to the right place to be able to educate themselves and understand it.
Well, I think it's broader than that too, Andrew. I agree with everything you've said there, but there are now several ETFs out there that you can invest in digital assets. There's a number of managed investment schemes or funds that are out there as well that you can invest in. So we're actually seeing traditional investment products wrapping themselves around these crypto projects and these crypto tokens. So there's what I'm starting to see and suggesting to you is everything you've said, but the traditional TradFi, as the digital assets or crypto talks about it, is blending with DeFi. We're also seeing that there is crypto-backed lending happening now. So people can have a $100,000, $200,000 or more portfolio of crypto that they want to retain because, as I mentioned to you, the worst return in the last 4 years, over the last 15 years, the worst return or lowest return for a 4-year period is 23%. So people are saying, well, I don't want to divest of that, but I actually want to be able to lend against it for a house, lend against it for a car or a personal loan. So what we're seeing is a real blending of traditional finance with the crypto market, and it's getting much closer together. So all of that financial planning is not actually now just about advising about Bitcoin or advising about a meme coin project or an altcoin, which is what you touched on. You've got ETFs now, you've got managed investment schemes, you've got crypto-backed lending. It's starting to permeate and wrap itself around. The other thing that I'm seeing a lot of conversations happening, treasury managers and CFOs for companies. We're not just talking about multinational listed companies. I'm talking about a lot of Australian medium businesses. Maybe we're not saying small, but let's face it, we have, and most financial planners will probably have the directors or the partners or shareholders of some very successful businesses out there. These are businesses that might have 5, 10 million or more, and many of these medium-sized businesses have $50, $200 million cash on their balance sheet. Some of them do. But, even if you've got $1 million or $2 million, I'm seeing narratives happening with CFOs and treasury managers asking me and others in the industry, what if we put 5% of our balance sheet into Bitcoin?
Yep.
So they're looking at that return of 1,200% over the last 5 years, even if it's half of that, 600. I mean, these are big numbers. The alpha that you will get, as opposed to having cash that sits on your balance sheet that you are holding for an acquisition, that you're holding to buy another property and things like that. So we're seeing a lot of property developers as well in between properties where they're transitioning a portion of the sale from certain properties. Obviously, a lot of cash, they're building up the balance sheet to go and do the next one, but a portion of that they're applying to Bitcoin.
Yep.
So these are all of the use cases that we're seeing. And I think that once again, I mentioned some of this for your financial planning listeners that are out there. This is really starting to get into the vernacular or the core of what business is about and how it's using it. The use cases are well and truly moving beyond some way out there crypto project where none of us can understand, or that all the young ones are kind of creating something crazy, or in the gaming space. For sure, they exist and they'll continue to grow as well. But it's becoming into mainstream core, and they're the sorts of conversations that I think accountants and financial planners should be having with their clients. And once again, I will say that if they're not understanding the language, not having the conversation, those clients are starting to leave you. They're starting to drift away from you.
Yeah, it's the maturing of cryptocurrency and the integration into traditional finance, and it's the more of these use cases that materialize, it also lowers the overall risk profile of the asset class. Originally, Bitcoin was an organic bottom-up movement from libertarians and tech geeks and anarchists, really, and then it started embracing more broader consumer audiences, retail investor audience. But now, last year, a lot of that growth was driven by institutional investors. BlackRock's ETF, the biggest, fastest growing ETF in history, overtook the previous biggest ETF, their gold ETF. It doubled it in the first 9 months of existing. Their Bitcoin ETF doubled the gold ETF. So you've got this new market emerging for crypto, being the institutions. And now you've got corporate market emerging as well with the Michael Saylor effect. And I'll often talk about MetaPlanet. So Japanese sort of Me Too copycat for the Bitcoin, Michael Saylor's strategy. That was MetaPlanet's listed on the Japanese stock exchange, and it was the highest returning listed equity in the world. It returned 4,300% in 1 year return. And that was based off its strategy of buying Bitcoin, basically, and then issuing convertible notes and etc. to buy more Bitcoin. So you've got the consumer market, you've got the institutional market, you've got the corporate market, and now what we haven't touched on yet is the sovereign nation market, and with strategic Bitcoin reserves. There's 26 states in America have got big strategic Bitcoin reserves in their state legislative bodies, looking to try and get them approved so that they can invest in Bitcoin. Trump has set up the strategic Bitcoin reserve for America, the Federal Reserve, which lays a foundation for more growth. So you've got now 4 different target audiences or consumer bases for specifically Bitcoin, in particular in this case, which diversifies the risk of this not being around tomorrow, or the longevity of it, or even the stability and the volatility of it is likely to sort of moderating.
Look, Andrew, if I could add to that, the $4 trillion Australian superannuation industry. So everything you've said, I entirely agree with, and I would say let's just have a look at our own superannuation industry. 27% of the general population would like their super fund already to offer crypto. That was a YouGov survey that Swyftx ran. And then amongst current crypto owners, 71% would actually like their super fund to have exposure to crypto. So this is a big area, not to mention that we've had an 84% increase in new SMSF accounts on Swyftx since 2021. These are big numbers, and people are talking with that. So once the superannuation industry in Australia is really starting to invest in the industry, the floodgates are going to be open. It is going to radically change the way in which investing is happening here. And that's just using the use case of crypto as an investment. I mean, I haven't even talked about, because it probably wasn't highly relevant, but crypto as payment rails. I touched a little bit on stable coins, international institutional payments. But you're going to start to see use cases of crypto being in the shopping cart. When you're online buying, you're going to start seeing crypto being able to be used for paying there, crypto-backed credit cards and those sorts of things as well. So back to the confidence that the financial planners should have, this is not just a speculative asset class anymore. It is radically transforming the way that traditional finance operates. It's not going to get rid of, and I think that's probably one of the misnomers that early people to crypto talked about, well, it's going to do away with TradFi and traditional banks, etc. It's not going to. It's going to radically change the way in which they offer services to their customers, and it's going to cut out a lot of the middle people. And that's why there's a lot of resistance. There's a lot of misinformation out there. If you have a look at doing an international transfer via the traditional Swift network, there's up to about 13 different steps that you need to go to. In crypto, there's really one. It's a peer-to-peer transfer or two. So there are 2 steps in traditional crypto. It can happen in a fraction of a second, and it costs cents to do it.
Yep.
In traditional finance, it's up to 13 steps. It's 2, 3, 4 days, and it's 50, 70, hundreds of dollars to do these transactions.
Or even if you're transferring, I was talking to a client, sorry to interrupt, but I was talking to somebody who was trying to transfer for their client. They were a lawyer. They were $10 million and they needed to move it to the other side of the world. It took weeks and it took hundreds of thousands of dollars in cost to be able to just transfer that money to the other side of the world. In crypto, to your point, it doesn't matter if it's 1 cent or if it's $10 million. It's still going to take just as long, be just as quick.
It's seconds.
Yep.
It's done within seconds, and it's costing fractions of cents to do it. But the reason we're not doing more of it at the moment is because there's so much scaremongering of all of those intermediaries in there, and those intermediaries arguing that, there's not enough controls about it. In fact, if you really understood the industry, it's actually easier to trace anything on the blockchain than it is with cash. Once again, look, the traditional banks, what I would also say, and this is about educating financial planners, because many people of the years of experience that I've had as well, it's a love-hate relationship with banks. But we kind of, in some respect, kind of trust them, because I think Australia particularly does have a very robust financial system globally. Let's be honest about that. But also let's understand that those very banks that are blocking people's transactions to crypto, that are limiting the transactions to crypto, behind the scenes are investing in their own digital assets teams, and their own treasury operations are investing and have crypto on their balance sheets. So if it's so bad, then why are they participating in it? Why are they building up their own digital assets teams, looking at how they can offer it to retail customers? Why are their institutional teams trading crypto and making money on it and investing and putting it on the balance sheet? These are the sorts of things that I would also say. Just be aware when you're out there and you're hearing about the scams and you're hearing about the banks doing this and saying, we're blocking it, we're reducing it by that. Maybe there's an ulterior motive there. Once again, I would just say, be quite open-minded about it. And the reason that you might not be wanting to get in and advise your clients about it, maybe you're basing it on old fallacies and incorrect data or fake news. From a Swyftx perspective, we're very much about education as well. We think having people informed is what it's about. They should be able to make up their own minds after that. And I think once again, with the sorts of education that you're bringing to the industry in a credible way, just helps financial planners and helps their clients really understand what options are open to them. Because if you leave it too long, you've got further and further to catch up. That's probably the message. We are still in the early stages, but it is racing. It is an industry now that is really racing. I think we even talked about, you might have used about going down the rabbit warren. There are lots of areas you can go very deep in. I wouldn't suggest to start off with that you even need to go that deep in those areas, but certainly starting to build a higher level helicopter view of this asset class is something that's very important to everybody in the financial planning industry.
Yep. I wholeheartedly agree with that. And it's important to have a balanced perspective on this as well. And the reality is that, there is, if you look past at the history of crypto, there are a lot of scams. There's a lot of hacking. There's a lot of, what the industry call rug pulls, but the meme coins and just insiders taking all the money out, pumping it up and taking money. This stuff does happen, but it doesn't mean that happens to every opportunity. And so you do, there is a way to invest in crypto that will suit everybody's risk appetite. You just need to talk to somebody who can help you know what's the best way that's going to help you and meet your risk appetite, do it in a way that is appropriate for you, because, we've all got different goals and objectives and different risk appetites and different time horizons around how long we want to hold these assets for. So I think that's one of the probably a key message that I'm hearing from you as well, that getting started and doing it in a way that's suitable to you is really, really important. Talk to trusted advisors, build up your expertise. It doesn't mean you're going all in on the next meme coin that comes across your desk. But there are ways to do it in a prudent, professional, balanced, considered way. But the best pathway is to get started, start doing it, learn by doing, and start off slow and build up based on your own risk appetite.
Look, 100% agree, Andrew, with everything you've said. If you get caught up in the narrative that there's some astronomical 1,000, 4,000, 5,000% returns in cryptos, there are, but I wouldn't be chasing those by any stretch. I wouldn't be chasing that at all, particularly if you're new into crypto. Get in, go in a small way, start to understand it, take your time, but I think you'll be pleasantly surprised how enlightened you will be about how professional the industry really has become, what opportunities there are, what returns there are. But yeah, it's not an industry where I'd go and get caught up by the bedazzled, shiny lights of massive returns. Most times I'd be staying away from that. And I think anybody that's responsible and has a responsible outlook for the opportunities wouldn't be pushing you down something like that. You touched on different scams and frauds. Look, the percentage of the total industry value is less than 1%. It's actually less than what's happening in the cash, frauds and scams in traditional areas. So crypto gets a bad name for that. And once again, I think there's a lot of scaremongering. But at the same time, people have been caught up in it. People do get naive about it, and people do get caught up in looking for a really quick return. And also there are dishonest players, just as there are in the property industry, in the equities industry, and so on. So it's about arming yourself with some good education, taking it at a pace that you're comfortable with, and allocating a portion of your portfolio that you're comfortable with. It's those fundamentals that apply to every other asset class. They're no different to crypto, and I think they should be applied equally here with a good level of prudence.
Fantastic. Well, Jason, I think we've got to the end of the time limit, but I really appreciate it. It's been great listening to such a balanced and a professional take on the industry. And there's a lot of takeaways that I've taken from this, and I'm sure the audience would as well. If the listeners want to follow you a bit more to keep abreast of the market and listen to your commentary, what's the best way that they can do that?
Probably LinkedIn. Certainly, I'm out there on LinkedIn making a number of comments on there. It's challenging how many podcasts and that I can potentially participate in. This was one that I accepted and I was very keen to do it. So I do speak sometimes on things. But as I said, follow me on LinkedIn. I try to be pretty active. I try to be responsive as well on there. So if people reach out to me directly, I'm always happy to give them some, thoughts, guidance, different areas that I would point them in the direction of, and also potentially with our team. So we do work with a broad range of financial planners and accountants throughout Australia. It's something that I think is important. We are a part of the ecosystem. They're a part of the ecosystem, and we're working with an increasing number of them. So by all means, happy for people to reach out directly. Happy to have an engaged conversation and let them know a little bit more about how Swyftx works, how our team could work with them as well. So thank you, Andrew, for the opportunity. Really enjoy it, and I continue to look forward to following you as well.
Fantastic, Jason. All right. Thanks again for your time.
Thank you.
Bye for now.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.